G'day and welcome to the Morgans Edward Street weekly wrap for the 10th of August. Reporting season has started to heat up towards the back end of this week and we expect it to accelerate over the next 2 weeks. Overall, I feel that the Bulls are in front in the early rounds, but there's a long way to go. For more, I'll pass you over to Tristan.
Thanks, Cameron. It's been a strange week in world markets with the Dow Jones, oil, gold and the Aussie dollar all remaining in a tight trading range. The Dow is showing remarkable stability whilst not really moving in any direction. Oil has been range bound at $72.20 per barrel, which is still a price at which many producers are making great money. Gold is at $1,212 per ounce, little changed over the week. And the Aussie dollar is buying 74.3 US cents, again, little change over the week. The outlier here is iron ore, which has moved up nearly 5% over the week to $69.78 per tonne. This is great news for the majors like BHP and Rio, although the discount that exists for lower quality ore still haunts Fortescue Metals. The Rio CEO was noted during the week as saying that he thought that discount as it stands will be structural rather than cyclical, as the Chinese steel mills are under pressure to lower emissions and pollution. Interestingly, this is exactly what happened in the 80s when the Japanese were the major buyer of our iron ore. Initially, they took everything they could, and over the course of their decade of dramatic growth, they became more and more picky about the quality of the iron ore. This isn't great news for Fortescue holders, so it'll be interesting to see what strategies they put in place to counter this issue. On our markets, we are in the midst of reporting season, with notables such as Rio, Transurban, AMP, CBA and Suncorp all hounding down solid results. Suncorp in particular was very strong, which shows the market is willing to reward companies who outperform their guidance. The ASX reports today, and we're expecting a fairly benign operating environment and a respectable result. Next week, we are really in the thick of it with over 50 companies under our research reporting. Telstra reports next Thursday, which I'm sure will hold a lot of interest, perhaps not for their earnings report, but more for the outlook statement and a comment on the level of competition in the industry. Now I'll throw back to Cameron to hear what stock he's chosen in the recent week and why it's worth an investment.
Thanks, Tristan. The stock I like at these current levels is Over the Wire, ticker code OTW. Over the Wire is a telecommunications and IT service company that offers different products and services to business. These offerings include data networks and internet, voice, cloud and managed services, and data center co-location. This is only a $150 million company based here in Brisbane, which has continued to deliver 20% organic revenue growth. Operating in a fragmented market, acquisitions have previously and will likely continue to be made for future growth. The reason I like this business is that Morgans forecasts roughly a 30% cash return on equity, strong cash flow, high earnings growth as discussed, and an undemanding trading multiple relative to its growth, and management that is willing to put its money where its mouth is. Our analyst has a target price of $4.03, which represents 15% upside to the current price of $3.43. Over the Wire is set to report its full year earnings on August the 22nd. I note that this company is quite a liquid, so talk to your Edward Street advisor if you want to own this business. Thanks, Tristan.
Thanks, Cameron. Well, that wraps up another busy week. Please remember that our comments in the video are general in nature, and speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. See you next week.